different people understand things differently. So I think Saylor also knows we're early, but I believe he understands it's ending soon. That's why he is buying, like, I'll buy the tops.
Yeah.
When he has the capital, he'll deploy it.
Yeah.
It's not about, okay, I'll wait a bit, because he sees that urgency. But I never really believed in the cycles. It's you can say that there is a cycle because there is the 4-year halving. And you can say there is a cycle because presidential elections are 4 years in the US, and that largely drives a lot of the cyclical nature of the markets. But the fact that we have 3 cycles doesn't mean anything. It's like you flipped a coin 3 times and you got heads 3 times. Does that mean we're going to always have heads? No. So we'll probably see something change now because of all these structural market changes. And I think you're going to see like a super cycle, omega cycle, something where it's just moving differently and upwards.
Bitcoin has turned into something nobody expected. The wild swings are gone. The parabolic moves that defined every cycle have vanished. Instead, we are watching Bitcoin act like a stablecoin, barely moving while the world around it shifts faster than ever. This should be the year of the mega rally. The halving happened. ETFs are here. Institutions are buying. Michael Saylor keeps stacking without pause. Yet the price sits frozen, locked in a range that makes no sense. Something feels wrong, and people are starting to ask uncomfortable questions. The markets have changed in ways we barely understand. Trillions of dollars now flow through ETFs. Nation-states are talking about reserves. Corporations are putting Bitcoin on their balance sheets. All of this should be rocket fuel, but the rocket refuses to launch. Meanwhile, the community is tearing itself apart over core development, spam, and control. Bitcoiners who once stood united are now fighting each other while the price drifts sideways. Fear is creeping in. Did we miss the cycle? Are the parabolic days over? Has institutional adoption killed volatility forever? Samson Mow says most people are missing what is really happening. He believes the price is stuck because of forces that cannot hold forever. He thinks what is holding Bitcoin down right now is temporary, and when it breaks, it will not follow any pattern we have seen before. He says the cycles are officially dead, but what is coming next might be far bigger than anyone imagines. This is not the end. He believes this is the setup for something massive. Let's watch clips from Samson Mow's interview to gain more insight. Please don't forget to like, subscribe, and enable notifications for more in-depth content. Thanks for joining us again. Enjoy the rest of the video.
Different people understand things differently. So I think Saylor also knows we're early, but I believe he understands it's ending soon. That's why he is buying, like, I'll buy the tops.
Yeah.
When he has the capital, he'll deploy it.
Yeah.
It's not about, okay, I'll wait a bit, because he sees that urgency. But another good indicator is, why are we early? Because we have DATs, or digital asset treasury companies, that are buying Ethereum. Like, why would any rational person or investment committee authorize something like that, where you're buying something that has 70% pre-mine, is largely controlled by the guys that launched the ICO, and one of the DATs is owned by one of the guys that launched the token. It's a sign that we are really early. I would say everything has changed, and I go back to the ETFs. A large part of maybe that cyclical structure that we've seen is because when there is a large spike in demand and interest in Bitcoin, the exchanges have always been the bottleneck. Like, they would not be able to KYC people fast enough. And that is how you dull the rampant movement upwards, like Omega style candles. But now with the ETFs, that's not an issue. I think as we move to more in-kind issuances, the moves up are going to be more pronounced. And there's no barrier now because the buying is aggregated. It's all aggregation. And that is because of the ETF. So I like to think of the ETFs as a portal for capital to go into Bitcoin. And the portal is wide open now, and there's no limit to the throughput of that portal. All the traditional capital come in. And then look at the Bitcoin treasury companies like Strategy. That's also another big portal too. They can tap into fixed income markets, the bond markets. And again, there is no bottleneck because the buying is aggregated. So I think it's just a matter of time. But I never really believed in the cycles. You can say that there is a cycle because there is the 4-year halving. And you can say there is a cycle because presidential elections are 4 years in the US, and that largely drives a lot of the cyclical nature of the markets. But the fact that we have 3 cycles doesn't mean anything. It's like you flip the coin 3 times and you got heads 3 times. Does that mean we're going to always have heads? No. So we'll probably see something change now because of all these structural market changes. And I think you're going to see like a super cycle, omega cycle, something where it's just moving differently and upwards. Well, the risk is to holders of those assets, to the holders of the ETFs and to Bitcoin treasury companies that are with that large provider. Because it's true, like if you're big and you have most of the Bitcoin, there is some risk that something could happen. But the risk is not to people that use Bitcoin in the better way. I wouldn't say the right way. The better way is self-custody. Having Bitcoin in your own hardware wallet, in your software wallet, just having your own Bitcoin. There is no risk to us if we have our own Bitcoin. The risk is to people that farm out the responsibility for the Bitcoin to another entity. Yeah. Trusted third parties are security holes.
Absolutely. Do you ever see a world where these, BlackRock is custodying their own Bitcoin?
I think you will see that because there is just such a level of risk. And I think that risk is largely created because the approvers, the SEC, they want to see something done in a way that is established and methodological. So they want to see that you have a good custodian, and then everyone is filing because quote unquote Coinbase is a good custodian and they're going with the gold standard. But now that they're approved, I think they can move if they choose to, or build their own custody solutions, which I think they will start to do because you'll have an upfront investment of a certain amount of money, but then you won't be paying Coinbase forever. Sort of like the survival of the fittest. The fittest will custody their own coins. Okay. Everyone else will rely on a third party. And that's normal. It's sort of like gold, right?
Yeah.
The origin of gold is you have your own gold. And because of convenience, you give it to someone else.
Yeah.
And I think there are things that wallet developers like ourselves and others can do that make it far easier. Better ways of recovery of seed phrases, better backups, more robust backups. But by and large, there is a barrier to self-custody. And I think it's difficult to overcome because people are so accustomed to having their money in the bank and accustomed to looking at an app or a web page and seeing a number and thinking, oh, that's my number. And they just don't know or care enough to do something about that. And some people think it's a barrier, like it's a big learning curve to have a seed phrase. But as NVK says, if you can drive a car, you can back up 12 words. But it's just a mental block that I think stops people from doing it. The US has an SPR now, and they added to it from seizure.
Yeah.
And I think
they did. Right? It was like a lot of Bitcoin.
$14 billion of Bitcoin. And that could be a dangerous thing. Like if you cannot pass legislation like Cynthia Lummis's Bitcoin Act to accumulate in a non-budget neutral way.
Well, technically it was a non-budget.
Yeah. But right? Seizures are non-budget neutral. Seizures are budget neutral, right? They didn't spend money on that.
Yeah.
And if they can only accumulate through seizures, then the motivation is to accumulate by seizing people's Bitcoin, which is not ideal. But I think Bitcoin is less prone to seizure than, say, gold or anything physical. But of course, we have big pots of Bitcoin with the custodians. But I think the goal should be that they accumulate through the Bitcoin Act in a non-budget neutral manner. And I think the slowdown really is just it takes time and the government shutdown as well, probably. But I think it will move forward because it's a necessity. If you look at the overall landscape, like why is the US so bullish on Bitcoin and unfortunately crypto and digital assets? I think it's a necessity. They need it because no one is buying treasuries anymore. The world is moving away from the dollar or trying to move away from the dollar, BRICS countries especially. And there just are no more buyers. And the traditional buyers are also having economic woes back home, right? So they need to have stablecoin issuers like Tether, that I think Tether is the 18th largest buyer if they were a country, to shore up demand. And I think $38 trillion in debt is not something that they can ignore for much longer. So they do need to build a Bitcoin reserve, a sizable one, to mitigate that debt, because people are kind of used to the number now, but 38 trillion is a crazy big number. And you're pretty bankrupt. And, who wants to own more of your debt? I don't think it's possible to keep continuing it on that track. But also, just compounding of the interest is going to be ridiculous too. So something has to be done. And I think they realize the solution is Bitcoin.
Samson believes the calm is artificial, and the pressure underneath is building to dangerous levels. He points to one fact that cannot be ignored. Michael Saylor cannot possibly accumulate 10% of Bitcoin's supply at these price levels. The math does not work. He is going to keep buying, which means the price has to move. The bottlenecks that once slowed Bitcoin's rise no longer exist. Exchanges used to be the limiting factor. When demand surged, they could not onboard users fast enough, and that naturally cooled the rallies. Now, ETFs have removed that barrier completely. They act as wide-open portals for capital, with no limit on how fast money can flow in. Samson also points to aggregation as the game changer. Bitcoin treasury companies like Strategy are tapping bond markets, pulling capital from places Bitcoin could never touch before. This is not retail hype hitting exchange limits anymore. This is institutional infrastructure designed to absorb massive flows without friction. The recent $20,000 drop was the largest liquidation event in Bitcoin's history, yet the price barely fell. Altcoins got destroyed, but Bitcoin held strong. That is not a weakness. That is a sign the foundation is stronger than it looks, and when the breakout comes, nothing will be able to stop it.
The alternative to fixing it is a debt jubilee, a reset, a great fiat reset. You could also have a rebasing to Bitcoin. You say the debt is redeemable for sats. But before you do that, you should have a nice big chunk of Bitcoin in your reserves. But it's difficult to say. I don't really know what's going to happen. Like, the fiat experiment has gone wildly out of control. And I think you could say the nature of democracy contributes to that, right? Like, the nature of democracy is people get free stuff. And then they vote. And now it's the case in Canada. Like, why are the Liberals still in power? Because a lot of the older generation that get a lot of free things kept them in power. So it's sort of a question. We're at a crossroads right now. Where do we go? And it's hard to say. We can go on to a Bitcoin standard and I think repair a lot of that damage, or things get dark and the government needs to feed itself. They need money and they're going to get money by any means possible. Now, there's an opportunity there too, which is you can wean them off the money printing by getting them to mine Bitcoin. And we have a really good example of that today, which is Bhutan. They have over $1 billion of Bitcoin. They're building a new airport from their Bitcoin holdings. And they've shown that stranded energy, excess energy, converts to money. These are things that I've been saying for years, and now there's a very pertinent, very tangible example of it. And we were in Paraguay. We did a presentation and we met with the government there. Hopefully they can do something. We ran a calculation. Every year they're just running off 1,200 to 1,400 Bitcoin.
The Itapu Dam. The biggest dam in the world.
But it's the same for Canada. There's a massive amount of hydropower that's just run off or sold at a deep discount to the US. But many countries have excess or untapped energy, and they could easily tap that, just as Middle Eastern countries tap the oil reserves and sell that. Now you can turn water into money. Policy only works if everyone agrees on the policy. And it's being bypassed right now because it's not uniformly enforced. So people that want to spam the networks, they can go directly to a big mining pool that wants to mine big pictures and it'll go in the chain. And I think largely a lot of these policy things were implemented in the past because everyone was kind of acting as on their best behavior and in the best interest of the network. So we all follow these policy rules, which are sort of like guidelines for how you should behave. But if someone's breaking those rules and it's inciting other people to break them too, then the policy stops working.
Absolutely.
So we kind of have to fix it at a consensus level. And I think there is more or less a unanimous agreement that we don't want spam and that Bitcoin is money. This has been an arguing point back and forth. People were saying the core side don't think Bitcoin is money, but then some of them came out and said, yes, I do believe it's money. But there's such a level of nuance to this that a lot of the argumentative points are lost or miscommunicated or talking past each other, because another facet is people are saying, you can't stop spam. Absolutely. But I don't think anything can really stop spam completely 100%. And then like Adam is saying, well, we can't stop it, so we shouldn't bother stopping it. But I think he's coming around. We had a discussion today, and I think he also thinks we should do a soft fork to limit at the consensus level. So maybe we're able to move past this, but a lot of people are angry at this. I was at angry and confused. I was at a BitFX Securities event, and we're talking about securities and tokenized equities and whatnot. And we asked for questions from the audience, and one guy's question is, well, what about the core knots and spam and op returns?
Like, what does this have to do with anything?
Yeah, because people are worried about that, right? And I think it's better if we do de-escalate, we stop being inflammatory and we work on a real solution, because everyone does want something. Like if you look at knots, they want spam to stop. Yeah. They want filters. And if filters don't work at the node level that effectively, then it should be at the consensus level. And from my own personal view, I've always thought we should have done it at consensus. I've never said we run the filters and, filter harder, because it's not absolute. It's still bypassable.
The volatility is really, decreased tremendously. What's the deal with that?
I think
if you're talking about $1 million Omega candles,
it's all happening. It's just a matter of time. I think there are a number of things happening. Maybe it's the shakeout recently. We dropped $20K.
Yeah,
and that's
we got the major candle just in the wrong direction.
But you can see like the volatility has declined a lot. Like I think that was the largest flush ever of liquidations. That largest flush ever of liquidations, and all we did was drop 20. Altcoins dropped to, down to the 90%. Depths of hell.
Yeah.
But, Bitcoin largely unaffected. And it goes to show like the resilience is there. It's just there are factors that will push us down or keep us down. You can theorize about many things, but maybe it's not one answer. It's many different things. Maybe there is an exchange selling Bitcoin that they don't have, like FTX did. Maybe it is some paper Bitcoin. Maybe it's whales rotating. Maybe it's people moving into ETFs. I don't know. Maybe there's people taking profits. All of these things can be possible. We don't know. But what we do know is there is a limit. And what we do know is it's impossible that, Michael Saylor gets 10% of the supply. At these levels, he's going to get 10%. Like that's just ridiculous. So the price has to move sooner or later. And I think it's going to be sooner. The other thing probably is like, alts were running too hot. Ethereum was like, getting past its all-time highs. Ripple is at like $3.50, which is ridiculous. And I think when alts run too high, there's always a correction. And I've after our Volcano interview, I kind of flipped bearish because the alts were running. And we just know like that is unsustainable. And when they go, Bitcoin always will follow down a bit, but then we kind of shake them off and we go back up.
Samson no longer believes the 4-year cycle is a guarantee, and his reasoning cuts deep. Cycles existed because of patterns, but 3 cycles do not prove a rule. It is like flipping a coin 3 times and getting heads each time. That does not mean heads will always come. The structural changes in the market are too significant to ignore. ETFs have eliminated the bottlenecks. Treasury companies have unlocked bond markets. The pathways for capital are wider and faster than ever. When the move happens, it will not follow the old script. But he also sees danger brewing inside Bitcoin itself. The community is at war over development, spam, and control. The knots versus core battle has turned vicious, with both sides dug in and emotions running high. Samson thinks the only real solution is not policy, but consensus. Policy only works when everyone agrees. And right now, people are bypassing the rules by going straight to mining pools that will accept anything. The only way to stop spam for good is through a soft fork that changes Bitcoin at the base layer, something that cannot be worked around. He believes there is enough agreement to make it happen, but getting there will require the community to stop fighting and start building. Samson also raises concerns about centralization. Most Bitcoin ETFs custody their holdings with Coinbase, which creates concentration risk. He thinks firms like BlackRock will eventually build their own custody solutions to stop paying Coinbase forever and to reduce their exposure. But the bigger worry is not custodians. It is the shift away from self-custody. Fewer people are holding their own keys, and that trend will only accelerate as institutions take over. For Samson, that is natural selection. The people who understand sovereignty will custody their own coins. Everyone else will rely on third parties. It mirrors what happened with gold. Looking ahead, Samson sees a future where governments have no choice but to hold Bitcoin. The dollar is losing buyers. Debt is spiraling out of control. BRICS nations are pulling away. Stablecoins like Tether are propping up treasury demand, but that is a temporary fix, not a solution. Bitcoin is the only asset that can help nations escape the debt trap, and eventually, they will realize it. The United States needs a strategic reserve not because it sounds good, but because $38 trillion in debt cannot be sustained without it. When that shift happens, the price will reflect reality, and reality is coming faster than most people understand. The cycles may be dead, but what replaces them could be the biggest move Bitcoin has ever seen. Now, do you think the era of predictable cycles is truly over? And what happens when the rules no longer apply? Please drop your thoughts in the comments below. Thanks for watching. Don't forget to like and subscribe.